Hello, everyone. Happy Independence Day. It is Sunday, July 4th, and this is episode 20 of Odds Are, your S&P 500 weekly market forecast. Can anybody say go, America, go? Our stock market was on a tear just in time for the 4th of July weekend, and we're going to take a look at the price action last week and just how far it went up. All right, let's take a look here. So you see that the market continued to stretch that upper Bollinger Band. We did breach the upper breach point. So we had a breach of the breach point and got right up to that upper settlement limit and then pulled back just enough, right? So we ended up closing within the expected settlement range. So both forecasts were accurate. We did have a breach of the upper breach point and stayed within the expected settlement limit. All right, let's take a look at the moving averages. If you didn't see this one coming, I don't know what to tell you. It's bullish across all three time scales. All-time highs, stretching that Bollinger Band up as we've been seeing, and nothing to worry about, right? No worries in sight. Or are there? But let's move right on to the breach points. Okay, so your breach points for this week, we are looking at 4370 on the top side and 4287 on the downside. So 81.3% chance. Odds are that we are going to have a breach of one of those two levels. Let's add in the layer now of the expected settlement range. So odds are 79% that we will close between 4221 and 4416. It's pretty nice wide range there. Again, the market, whether it's going up fast or down fast, tends to require a little bit more breathing room, and so these ranges adjust. Let's add in the parabolic SAR. All right, parabolic SAR now up to 4126, still way below where we're at right now, but just trailing upwards. And let's wrap it all up together here with the expected the relative view for next week. All right, so relative view for next week, see all your price points here. Look how far the parabolic SAR is below even that expected, the lower settlement limit. So no concerns there. I am keeping an eye on that like midline of the Bollinger Band, and so we're kind of thinking eventually this will take a breather, but we'll see. After the 4th of July weekend with a short week coming up next week, we'll see what the volume is like. But still, no changes to our forecast. Still looking at a high percent that we will breach one of those two breach points. Given a choice between those two, I would choose the lower, the 4287. Looking at how many positive days we've had in a row there. The tendency of the market is that after a nice run like that, especially running into a holiday weekend, we'll probably kick off the week on a positive note, but I would not bet on the 4370. That's just me. All right. Didn't see that one coming. So, market continues to make all-time highs. There is seemingly no end in sight, right? So one of the things that I did not see coming is that here in July, we would still be making all-time highs. This is great, right, for those who are holding stocks, and concerning for those that are trying to get into the stock market now. And what I mean by that is that if you're just getting introduced to the markets, or if you're starting, let's say your 401k now, or if you're dabbling in investing or trading, this is a scary time to do so. And the reason why I say that is because a lot of people have this conception, or should I say misconception, that if you get into stocks and you hold them for 10 years, you're gonna make something, right? Long term, the market's always going up. But the reality is that it depends on when you get in. So if you were to get in, let's say, for example, if you would have gotten in during the peak of the 2000s, you would have had to wait until the recovery from 2008, which really didn't come back until around 2013, to get your money back. So that means that from 2000s to about 2013, you would have broken even, and that's assuming you would have just held and not had any commissions. So look at the charts and see, imagine the worst case scenario. If you would have gotten in at the top, how long would it have taken you to actually see a return on your investment? And that's not even counting any adjustments for inflation. So yes, you can get into the stock market at the wrong time. Yes, you can hold it for 10, 15 years and still not make any money. And so what I'm seeing now is that this market, regardless of when it's going to be, whether it's next week or within the next 3 to 4 months, next year, when this market rolls over, we have a lot of downside risk on this and a lot of room to kind of get back to the mean, right? So if you believe in mean reversion, well, we're quite a ways away from the mean, and we need to kind of realize that when we're making long-term decisions. So that's just something to keep in mind. And in keeping with that theme, our quote of the week is by Mr. Ben Graham. He was an economist, and he was very well known for his theories on value investing. And his quote says, "Investors should purchase stocks like they purchase groceries, not like they purchase perfume." I'm sure most of you out there, right? Almost all of you are going to be smart enough to really understand the implications here, but I'll give you my take on it anyway. So you don't go to the grocery store and find the item that is most expensive and not on sale, and that the prices, you're going for the deals, right? You're going to go and try to get the best combination of quality and value. Whereas with perfume, some people really do want the expensive stuff, right? Because it smells better, it lasts longer, there's name brand associated with it, there's just that intrinsic value that people place on that. Whereas with stocks, you're not looking for, if you're doing this, you're doing it the wrong way. You're not buying a stock because you want to be able to tell your friends that I own a share of Amazon or Tesla or Netflix. That's not where you're doing it. You're looking for a good value. You're looking for something that you believe you can get in and is going to give you a return on your investment. And so when you go to the grocery store, you're looking for what's on sale, what can I stock up on, what can I, do to get the most value out of my purchases. And that's something that I think we've kind of lost, especially now with all the meme stocks and people trading on their phones, and it's become more of it's more about the destination than it is the process. And I think that's a problem, because if your goal is just to own stock, well, go ahead. Download an app, get on there, you can open an account, you can buy whatever you want, right? The choice is yours. But if you're looking to get in at the right time, if you're looking for a value, then you have to be a little bit more astute. And so that's my suggestion. That's my recommendation to all you guys out there that are looking to get into investing or trading. Look for value. Remember, the choice is always yours. I'll see you guys next week. Enjoy your 4th of July weekend.